Imagine an event so massive, so disruptive, that it literally rewrites the rules of the entire artificial intelligence industry overnight. Welcome to this explainer on the impending Anthropic IPO. We're talking about a staggering $900 billion valuation here. So this isn't just your standard fundraising milestone. No, this is an earthquake. It's an event that's going to completely reset pricing, talent flow, and the entire competitive landscape of AI as we know it. Let's dive in. To really wrap our heads around the sheer scale of this thing, here is our roadmap. We're going to map out the exact ripple effects of this listing. We'll start with the unbelievable valuation math. Look at why October is the perfect window, break down 5 massive market unlocks, explore the industry-wide shockwaves, and finally, look at the unpriced dangers waiting for us in 2027.
Okay, let's kick things off with Section 1, the unprecedented valuation math.
Now, right out of the gate, you have to understand that this is not your typical pre-IPO trajectory. Normally, you'd see a long, steady growth period with, modest step-ups in value. But Anthropic, they more than doubled their valuation in just 90 days. We're talking a jump from $380 billion in February 2026 to up to $900 billion by May. I mean, to put that into perspective, absolutely no company in American tech history has scaled at this kind of velocity. It's wild.
And look, it isn't just hype. That math is actually backed by a massive $30 to $40 billion annualized revenue run rate. And here's the kicker. 80% of that comes strictly from enterprise customers. We are talking about over 1,000 corporate giants spending more than $1 million a year each. That kind of enterprise dominance is exactly what's fueling this insane jump from $9 billion at the end of 2025 to over $30 billion by April. This total explosion in revenue is exactly why the secondary market price has surged by 381% year over year. Think about that. Investors who managed to get in during February are sitting on a 2.4x paper return in just 3 months before the bell even rings. It tells us that sheer pent-up demand, rather than just fundamental math, is going to cause an absolute frenzy on day one of trading.
So timing is absolutely crucial here, which brings us to Section 2, why October is perfect.
A public listing is really a calendar problem long before it becomes a financial one. And right now, Anthropic is up against a ticking clock. By Q3, they'll finally have 3 years of clean, audited financials ready to go. Then October offers this incredibly favorable macro window, stable rates, plus a market that is just obsessed with AI. But here's the catch. October is basically the last clean window before early 2027. Why does that matter? Because 2027 is when a potential productivity bubble could burst. That's the moment enterprise companies might look at their bottom line and realize AI isn't saving them as much time or money as promised, which would cause tech valuations to absolutely plummet.
And then, of course, there's the intense competitive chess match playing out in the background. Back in late 2025, OpenAI's CFO explicitly stated that an IPO was, quote, not in the cards. Well, by leaping through this really narrow October window, Anthropic steals a massive 12-month first-mover advantage over its biggest rival. They get first access to public capital, they can offer untouchable employee compensation packages, and they gain acquisition currency that OpenAI simply cannot match right now. So, let's zoom out from just the financing aspect and look at Section 3, 5 massive market unlocks.
I absolutely love this perspective from labor economist Thorsten Meyer because it completely reframes how we should look at this. The $60 billion public raise? Actually, scratch that. The cash raise itself is probably the smallest part of the story. The IPO is simply the gate that triggers 5 other massive structural industry events all at exactly the same time. Let's quickly walk through these 5 unlocked gates. First up, Anthropic can suddenly buy other companies using liquid public stock as currency. Second, employee compensation completely transforms. Their restricted stock units instantly become 30 to 40% more valuable. Third, we get a secondary market on freeze. Early employees can finally cash out, unleashing a wave of compound capital straight into San Francisco real estate and new startup investments. Fourth, they can start heavily funding major silicon suppliers like Fractile. And finally, they open the door to deep, deep sovereign wealth. That last point is honestly staggering. By opening the public market floodgates, massive entities like the Saudi PIF, ADIA, and GIC can step in. And when they do, they transform this from a standard tech IPO into a global geopolitical event. Think about it. Only these massive nation-state funds have the sheer capital depth required to absorb shares at a $900 billion price tag without completely breaking the math.
Okay, so let's step a little further out into the blast radius with Section 4,
the industry ripple effects. Almost overnight, this shatters the status quo for literally everyone else in the sector. OpenAI is suddenly going to face intense pressure from investors to accelerate their own timeline to early 2027. Meanwhile, mid-tier labs, think Mistral or Cohere, are going to face a brutal re-anchoring. Basically, if they can't prove they're on par with Anthropic, they'll be forced to raise money at significantly lower valuations. The whole sector's secondary market unfreezes, and most aggressively, a massive war for talent is about to kick off. We're going to see a tidal wave of what's called vertical acqui-hires. Armed with this shiny new liquid public stock, Anthropic is poised to become the market's most aggressive predator. They'll start snapping up $200 million to $1 billion startups in sectors like legal, healthcare, and finance. And they're not doing it because those startups are necessarily thriving businesses. They're doing it purely to harvest their specialized talents and corporate reach way faster than building it from scratch.
And then there's the talent war itself. Just think about this for a second. The median compensation for an Anthropic software engineer is already an astounding $582,000, and it peaks near $1 million at the very top. Once that pay package includes liquid public stock that you can sell immediately, smaller labs won't stand a chance. They are going to bleed top senior talent straight to Anthropic. The entire industry's talent ladder is about to shift up by one incredibly expensive rung.
But here is where we have to take a breath and look at Section 5, the unpriced future risks, because it's not all guaranteed smooth sailing.
Looming on the horizon is Anthropic's first public earnings report in early 2027. And that is when they enter the brutal new world of strict public disclosure. When the bell rings, they will have to reveal 3 critical things to Wall Street. First, their compute capex, exactly how much they are burning on server costs compared to what they earn. Second, just how much of their revenue relies on a handful of top buyers. And third, the moment of truth, whether those enterprise clients are actually getting the AI productivity magic they paid so much for. Let's zero in on that revenue concentration risk for a second. Having 1,000 customers spending $1 million sounds incredible, right? But what if Wall Street looks at the books and sees that over 40% of their total revenue comes from just 10 massive clients? Suddenly, every single one of those top 10 customers becomes a terrifying single point of failure for the stock.
So they are walking a razor-thin tightrope here. That $900 billion premium? It isn't for what they've already done. It's basically a massive bet on flawless execution in a quarter that hasn't even happened yet. If those major customers go into 2027 missing their internal productivity targets, contract renewals could stall at the exact wrong moment for the brand new public company.
So what does this all mean? The ultimate takeaway for you to ponder is this. This October listing is a virtual guarantee to rewrite the structural DNA of the AI ecosystem. It's going to force competitors' hands, crush mid-tier valuations, and spark an unprecedented talent war. But the real question isn't whether Anthropic can go public, it's whether they can flawlessly navigate and survive the very market reality check they are accelerating. What happens when the hype finally meets the audit? Let me know what you think.